Hello everyone, and welcome to the NT Trading. Today, we're examining the recent downturn in the Indian equity markets, a drop spurred by Middle East tensions and fears of foreign institutional investor, or FII, outflows to cheaper markets like China. Over the week ending October 4th, Indian benchmarks took a significant hit, with the BSE Sensex dropping by 3,883 points to close at 81,688, and the Nifty 50 sliding down by 1,164 points to 25,015. These declines equate to a loss of nearly 4.5% for both indices, underscoring the elevated volatility we've been experiencing. This downturn is in part due to rising oil prices, fueled by heightened Middle East tensions. Oil prices jumped sharply last week, with Brent crude futures climbing by 9.1% to end the week at $78.05 per barrel. As a net oil importer, India is particularly sensitive to these price fluctuations, as any increase in crude oil prices heightens the risk of input cost inflation for various industries, particularly paint, tire, and energy sectors. Turning to sectoral performance, we saw considerable losses across the board, with the Nifty auto, banking, oil and gas, and FMCG indices all logging substantial declines. Pharmaceuticals also face challenges, though the Nifty IT sector managed to fare slightly better, buoyed by improved sentiment after a more dovish U.S. Federal Reserve. Notably, the Nifty Metal Index outperformed, gaining around 0.5% on the back of stimulus measures from China, which bolstered global metal prices. Looking ahead, there are some key events that could shape the market's trajectory. Next week, the Reserve Bank of India's Monetary Policy Committee will conclude its three-day meeting, with much of the focus on the timing of any potential rate cuts. Another pivotal moment will be the September quarter earnings season, kicking off with Tata Consultancy Services. Investors will closely scrutinize earnings, especially in the IT sector, as companies reveal their outlook on macroeconomic recovery and demand expectations for 2025. On the international stage, we're watching the unfolding situation in the Middle East, as any further escalation could drive oil prices even higher, putting additional strain on the Indian economy. Furthermore, the minutes from the U.S. Federal Reserve's recent meeting, along with U.S. inflation numbers and comments from various Fed officials, are expected to provide clues on the Fed's next moves. This data could significantly impact global markets, including India's, by influencing future FII flows. Despite heavy FII selling last week amounting to over 40,500 rupees crore, domestic institutional investors, or DIIs, managed to offset much of this with net purchases of 33,074 rupees crore, lending some support to the Indian markets. The ongoing tug-of-war between FIIs and DIIs reflects the heightened uncertainty and risk aversion prevailing among global investors. Finally, on October 11th, we'll get a fresh batch of economic data, including foreign exchange reserves and industrial production figures for August. This data will offer further insights into India's economic resilience amidst these volatile conditions. In conclusion, the current market environment remains challenging, with significant headwinds from both domestic and global fronts. Staying informed and vigilant will be key as we navigate these turbulent times. Thank you, and we'll continue to monitor these developments closely.
This video is made for educational purposes only. Please don't make any investment decisions based on it. If you like the video, please like, share, and subscribe. Thank you.